RAM prices are rising again, quietly, without headlines screaming about a tech boom, without retail investors rushing in. And yet this subtle shift is one of the clearest signals of a structural change in the memory market we've seen in years. This isn't about gamers upgrading their PCs or a spike in laptops. It isn't about a temporary supply chain glitch. This is a market-level shift, the kind of change that only comes after decades of cycles, bankruptcies, and brutal lessons in capital discipline. And at the center of it, standing quietly but powerfully, is a company most people overlook: Micron. Micron was founded in 1978 in Boise, Idaho by three engineers: Ward Parkinson, Joe Parkinson, and Dennis Wilson. Unlike startups chasing the next flashy consumer gadget, Micron's founders focused on one thing: building reliable, large-scale memory manufacturing. Boise wasn't a tech hub, venture capital wasn't flowing freely, and the memory business was already one of the most cutthroat industries in technology. From the beginning, Micron carved out its identity in the shadows. While other companies chased brand recognition and consumer attention, Micron stayed in the infrastructure layer of computing, the part of technology most people never notice, but without which nothing functions. Every smartphone, every laptop, every data center, every AI model depends on memory chips operating flawlessly every second. This focus shaped Micron's DNA. Memory is a commodity, and in a commodity market, timing matters more than innovation. Margins can vanish overnight, and overproduction can destroy years of profits. Many competitors didn't survive, but Micron did, not because it avoided mistakes, but because it learned how to endure them. That resilience is exactly what sets Micron apart today as RAM prices quietly rise. The memory market has always been cyclical. Prices rise, companies expand production to capture profits, oversupply hits, and prices collapse. Factories are idled, capital spending is cut, and then the cycle begins again. For decades, this pattern destroyed shareholder value across the industry. The most recent downturn was particularly brutal. RAM prices fell sharply, margins evaporated, and some manufacturers were forced to sell chips below cost. Many players left the market entirely. Survivors had to rebuild from the ashes. But these cycles weren't random, they were predictable. Memory is a commodity where supply and demand are tightly linked, and the most successful players are those that understand the cycle and survive it. Micron's ability to endure multiple cycles is what positions it to benefit from the current shift. The key difference today isn't demand, it's supply behavior. Memory manufacturers have finally started exercising discipline. After decades of overexpansion and destroyed profits, production cuts, delayed capacity expansions, and reduced capital expenditures are tightening the market. The global DRAM market is now dominated by just three players: Samsung, SK Hynix, and Micron. All three have learned that controlling supply is the only way to maintain sustainable profits. Unlike in previous cycles where every expansion triggered oversupply, today the market is more cautious, guided by survival instincts and lessons learned. This structural shift alone explains much of the recent price recovery. Supply is no longer flooding the market uncontrollably, which means even moderate increases in demand can have a significant effect on prices. Artificial intelligence plays a role, but not in the obvious way. AI doesn't simply increase demand for more RAM, it increases demand for better, higher-performing memory. Data centers and AI workloads require high-bandwidth memory, extremely low-latency DRAM, and specialized chips capable of handling massive datasets. These aren't the commodity DRAM products that flooded the market in previous cycles. They are premium, high-margin products. This trend favors companies with advanced manufacturing capabilities and the resilience to survive downturns, qualities Micron has developed over decades. AI doesn't create a bubble. It highlights the structural advantages of disciplined memory producers. On steady reveal, moody blue lighting.
Micron enters this cycle in a strong position. It survived the last downturn without catastrophic balance sheet damage, maintained deep relationships with enterprise and data center clients, and as one of the few major US-based memory manufacturers, benefits from strategic relevance and potential government incentives. With supply constrained and prices rising, operating leverage works in Micron's favor. Even modest price increases lead to disproportionate profit recovery. Micron didn't win by chasing volume or hype. It won by enduring. And in a cyclical, brutal industry, survival is often the most powerful competitive advantage.
Memory remains cyclical. If demand collapses, competitors overbuild, or AI investment slows, prices could fall again. Volatility is inevitable. This isn't an investment recommendation, it's analysis of the structural forces in the market. But right now, the signal is clear. Supply discipline, fewer competitors, and increasing demand for premium memory create conditions where prices can rise sustainably. Micron is simply positioned to benefit more than most. Its decades of surviving brutal cycles and disciplined strategy make it the strongest player in the current environment. If we look at Micron's stock over the past 12 months, it tells the story in numbers. After bottoming during the previous memory cycle downturn, Micron's shares have steadily risen, reflecting both market recognition of supply discipline and anticipation of AI-driven demand for high-end memory. Recent earnings reports showed stronger than expected margins, driven by both DRAM price increases and improved operational efficiency. Analysts have revised guidance upward for the current fiscal year, and investors are beginning to price in the reality that the memory market is no longer just a low-margin commodity cycle. It's a structurally advantaged market for those who survived past volatility. The stock's reaction also mirrors sentiment in the broader semiconductor sector. While some competitors are struggling with inventory corrections, Micron's balance sheet, disciplined supply approach, and US manufacturing base have made it one of the most resilient and strategically positioned players. Market watchers are now seeing Micron as a company that doesn't just survive cycles, it capitalizes on them. Micron didn't win because it innovated faster or sold more units. It didn't chase hype or speculative growth. It survived cycles that destroyed competitors. In the memory business, resilience and strategic discipline are more important than flashy marketing. Now, as RAM prices quietly rise, the survivors control the game. Micron, shaped by its history, leadership, and discipline, is one of them. And in a world where memory drives everything from smartphones to AI, those who endure don't just survive, they win. For Stag Research, tell us what you think about the future of the memory market in the comments below, and don't forget to like and subscribe. Mr. Stag, logging off.